Hi everyone, my name is Mark Quinn. I'm a cross-border tax advisor and chartered financial planner based in Portugal. I've been an expat here myself, coming up to 8 years now, and during that time I've helped lots of expats from all over the world establish residency here and plan for their new lives here in Portugal. And in this video I'm going to be covering briefly shedding your tax residence of your previous country, and in particular those of you that are coming from the UK. So one of the key drivers for coming to Portugal, in addition to the lovely weather, climate, people, food, etc., is the tax benefits it provides. And lots of my clients are applying for the 10-year non-habitual residency scheme, which I've covered in a separate video. Now, it's one thing applying and being accepted for the non-habitual residency scheme here, but you also need to make sure that you've shed your tax residency status of your previous country of residence. And for those of you that are coming from the UK, the tax residency rules are covered by the Statutory Residence Test 2013. It's quite a complicated piece of legislation. It's about 60 pages long and we've got over 100 pages of HMRC guidance notes. But it's effectively 3 tests within a test. So what you first do is you first look at an overseas automatic test. If you're automatically considered an overseas resident, then you don't have to worry. You're clearly out of the UK tax net. If you don't meet that test, you then move down to the second subtest, which is the automatic UK test. So if you satisfy any of those conditions, then you're automatically considered UK tax resident. And the final series of tests within the overall statutory residence test is called the sufficient ties tests. And this involves looking at the number of ties and connecting factors you have to the UK, and it scales your day count allowances. And the general rule is that the more ties and connecting factors you have to the UK, the less time you're able to spend back in the country without becoming a UK tax resident again. So for example, if you have 2 ties and connecting factors to the UK, in the first few years of your leaving the UK, you can spend 90 days back there without falling back under the UK tax rules. Now, as I say, this is quite a complicated piece of legislation, and we can guide you through how the test would apply to your specific situation and how many days you're allowed to spend back in the UK without losing the tax benefits of your non-habitual residence status here in Portugal. Just another couple of points to consider, that in the UK we're looking at a fiscal year running from April to April, whereas in Portugal we're looking at January to January. So that does create a slight discrepancy and offset, which we need to consider. We also need to consider the temporary non-residence rules, and what this means is if you leave the UK for less than 5 years, so if you return to the UK within 5 years, there may be tax implications of any planning you do during that 5-year period that you're in Portugal. So again, just be wary of that and speak to somebody about your situation. And the final point is that it is possible to be considered tax resident in 2 countries. And in this case, we have to look at what's called the tiebreaker provisions of the double taxation treaty between the UK and Portugal. And again, we can help you analyse that position, but also, importantly, try and avoid that position in the first place. So I hope you found this very quick video useful. Please feel free to contact me if you have any specific questions about your situation. And also please feel free to suggest anything else you want me to cover in future videos, because I'm doing these videos for you. I hope you find them useful, and I want to address specific issues and areas that you would like me to cover. See you soon.